How do you find your day trades, your swing trades? There's a very simple thing that I look for that can lead you to some of the most profitable trades, and they show up just about every single day. I'll explain what that is, plus do my analysis of the markets. There was an important move this week that you should all know about. And then finally, we'll look at the day trade of the week on GNS. So I've been trading the stock market for about 30 years, and one of the first things that I learned a long time ago was that the very best opportunities come when there is a surprise in the market. Now, what do I mean by that? Well, if you can imagine why companies' stocks go up so significantly, it's usually because there's some significant fundamental change. So a biotech company could have a new drug. That new drug could be successful and the stock goes higher. You can have the same in an oil and gas company. They find a new deposit of oil or gas and the stock goes up. Well, have you ever thought about how information about these new significant fundamental changes happens? How do some people learn about it? How does the broader market learn about it? And that's really the key to finding hot stocks, is to recognize that the stock market isn't fair, that there's always going to be some people that have better information than others. Now, when I started trading, I focused a lot on commodity stocks, oil and gas stocks, gold mining stocks, and these companies, they'd be out looking for gold or oil, and there would always be evidence in the market that someone knew something before the news came out. And I learned very quickly that if you wait for the news, if you wait for the public information, you're going to be too late. Because those people that learn about whatever significant fundamental change is underway first, those people act in the market and they tell us that the market is likely to go higher. So I learned a long time ago not to try to uncover information, because the information that I could get, or most likely that you could get, is public information, and that information is already known. It's already priced in to the market. It's the information that will be in the news releases tomorrow, a week from now. That's the kind of stuff that moves the market today. So, a very simple thing to look for are surprises. Stocks that are boring, that aren't really trading up or down more than they normally would. And then all of a sudden, they come alive with abnormal volume and abnormal price movement. And it could be up or down, but if we think about stocks to buy, of course, we want to find those stocks that surprise the market with strong volume and abnormal price gain. And about 20 years ago, I wrote an algorithm that does that, and I've been refining it ever since. And so when we look at the charts every week here, you'll often see these little dots on the chart. Those dots look for statistically significant abnormal price and abnormal volume movement. And where that occurs, we know that someone has some new information that is not known by most people. And I don't wait to know what the news is. I just follow them. I look for surprises and I trade those surprises. So let's look at a couple of examples from the past couple weeks here. So this first one is AMAM. And you can see this is a 13-minute chart going back 2 weeks. And 2 weeks ago, nobody really cared about the stock. So if I want to draw on here, you can see here, it's just very boring sideways trading. And then right here, the stock comes alive with abnormal price movement and abnormal volume. There's no explanation for it. Now, when that happens, I don't usually chase the initial show of abnormal price movement. You'll know that last week I talked about this very stock and how I wait for it to pull back, quiet down again, and then start up. And so last week we talked about this. It pulled back and then it started to move again. That's when I take the interest. Because sometimes there's false rumors in the market, and those false rumors can create that initial burst of abnormal activity. But then as the day progresses or the week progresses, depending on whether you're a day trader or a swing trader, you'll see that next wave come in. And you can see that when the next wave started, that stock made pretty significant gains. Show you another example. Here we have a stock that nobody cared about, and then it came alive with abnormal activity. Now notice that there's some little yellow and pink dots there. That is the indicator that I created to find these things. And I've created that indicator for a program called TradeStation. And then on my Stockscores.com website, we have that concept built into the market scan tool. If you want to learn more about that, you can go to Stockscores. If you want to learn more about how you can watch my TradeStation algorithms running during the day, you can learn more about that at Stockscores as well. But the key thing that you need to understand is when you see that abnormal activity, there's something behind it. There's some investors chasing the stock aggressively, pushing it up aggressively, and it's probably because they have some new information. And as more and more people learn about that new information, you get more and more people that come in to buy. And that's why these stocks can make these huge gains. I want to be a buyer early or maybe on the second signal, but I don't want to be the public chasing the stock higher once the news is widely disseminated. If everybody knows about it, if it's public information, it's useless because it's already priced into the stock. Now, at the end of the video, I will show you a day trade that was exactly like this that came up on this past Friday. It's a stock that surprised the market with abnormal activity, and I'll show you where the entry points and the exit points were on that. All right, so let's get into this week's market analysis. Jump over to the Stockscores.com website. First chart that I have up here is the S&P 500, and you can see that the S&P has been sliding lower in the last few weeks, but on Friday it made an important move. You can see that it broke this very short-term downward trend line, and it's come up to this little bit medium-term downward trend line. So the buyers made an important move, and that was on some inflation numbers, which the market didn't seem to think were so bad, and perhaps an indication that the US Fed won't raise interest rates quite so aggressively, and that's why the market rallied. Now let's take a look at that on the 3-year weekly chart. You can see here that we have rising bottoms. That's a sign of optimism. We've already broken this downward trend line, so I think there's a very good chance that the US stock market is going to move higher in the weeks ahead. Let's take a look at the Canadian stock market. Actually, let's look at small cap stocks in the US first because they look a little better. So here is the IWM, which is the small cap stocks in the US. And again, you can see that strong price action on Friday breaking this pullback. So we've got rising bottoms. That's a sign of optimism. The buyers are in control. But in the month of February, the sellers were pushing the market lower. And then on Friday, we broke that cycle from a slight rising bottom. So again, we have a pretty good signal that we're starting the traditionally strong time of year for the market, which is the spring. Markets tend to do well in January, get kind of bad in February, and then do well March, April, May, sometimes into June, then have a small correction, and then a summer rally. That's your typical seasonality of the market. So we're looking like that's going to happen again. Let's now take a look at the Canadian stock market, T.XIU for the TSX 60. We'll look at the 1 month chart first, 60 minute, and you can see here we broke the weakness on Thursday from a rising bottom, and that telegraphed this little run higher. Now we still don't have a great short-term scenario because there's all this resistance over here from earlier in the month of February, but we're making a nice comeback. How about the 3-year weekly chart? You can see there, stuck in this sideways range, and until we can break out of that, don't get too optimistic, and if we do, we're probably just going to go up to that level. So the Canadian market looks stable, and I would say the buyers are slightly in control, but it's not a bull market by any means, so you still want to be really focused on trading alpha stocks. Those stocks that are trading on their own story, which of course are characterized by what we talked about already, abnormal price, abnormal volume. All right, how about the commodity markets? GLD is gold. Gold had a nice little bounce back this week after being weak for most of February. And so there you can see the weakness in February, the build of a rising bottom. So we've switched from falling tops, which is pessimism, to now rising bottoms, which is optimism. And then on Friday broke through. So it does look like gold is going to try to recover here. And so I think we can be a little bit more optimistic. In the grand scheme of things, however, the 3-year weekly chart doesn't look great because we're stuck in this very long-term sideways range. So we might get a little trader's rally in gold in the next week or so, but nothing beyond that most likely. How about on oil? Let's take a look at USO, which is one of the oil ETFs. You can see on Friday it too went up quite nicely, but it's still stuck in this sideways range. On the 3-year weekly chart, you can see that we had that long-term upward trend, really did well from early in 2020 into sort of mid 2022 when it got a little overextended. Oil has pulled back to the upward trend line, and I think it's just going to hold here. It's a good market for oil companies. Prices of oil are high. I don't think you've got that explosive bullish trend that we had in 2020, 2021, but it's stable. And so if you see opportunities in oil stocks, they're probably worth considering because the price of oil is reasonably strong. All right, let's jump to currencies now. US dollar, UUP, and you can see a little bit of weakness at the end of the week, and you'll see why that was happening in just a moment. But still, the 1-month trend on the US dollar is up. The longer term trend is still fighting this downward trend line right here. And you can see we've risen up to that. We're getting stuck at it. And so there's a good chance we're going to see a pullback in the US dollar in the near term. Next up is GBTC, which is your Bitcoin ETF. And it's been sort of going sideways the last month. It broke the downward trend, but it's not really looking that strong. I think it's maybe looking stable, but not that strong. So I don't really think it's a great place to be a long-term buyer. Perhaps if you're a day trader, there might be opportunities on some days. Now, the last chart I want to look at is the proxy I use for interest rates. This is not an interest rate chart, but it represents interest rates. And if this stops going up, like it did on Friday, we had a little breakdown there, that's a signal that interest rates are likely to start to fall. And again, these are interest rates from the bond market, not from the central banks. The bond market takes its cue from what the central banks do, but it tends to predict what central banks will do in the future. And so the fact that this chart went down on Friday and broke that little upward trend line tells us that the bond market is predicting that interest rates are likely to fall or at least stabilize, and that the Fed may not raise interest rates as much as had been feared during the month of February. All right, so we can get into our ratings then. US and Canadian stocks neutral on both time frames. Gold, short-term bullish because we're getting a little bit of a bounce, and that may be a trader's bounce for the swing traders out there, but still neutral longer term. Oil, neutral on both time frames. The same for the US dollar, except bullish in the short term on the US dollar. Neutral on both time frames for Bitcoin. And interest rates, I've got my ratings as neutral. All right, so at the top of the video, I talked about the importance of surprises, about how you can use that for day trading, for swing trading. Let's now look at an example of a day trade from Friday. And here's a stock that nobody cared about coming into Friday. Boring, sideways trading, and then it came alive. Notice the yellow dots. That's I call it an action candle indicator. It basically means there's action coming into the market. There's abnormal price movement and abnormal volume. There's someone buying aggressively, some group, because they have some new information that justifies a higher price. And so that is what my algorithms running in TradeStation look for all day. We do that on our active live service at Stockscores. When we see that abnormal activity, then we're waiting for a place to jump on board where we can control risk intelligently. And so you could buy it here. That's pretty aggressive. The probability of it working on that first break is lower, but the potential profitability is higher because you're getting in early. My preference is to wait for the second signal. So there you see a little pink dot breaking a pullback. Volume is increasing. That to me is the ideal entry price. And so what happens then is we have our entry here, our stop just below there, and then that is our risk. And anything multiple of that is our risk reward ratio. And this stock ultimately gave a sell signal right there. when it broke its upward trend line from a falling top, that was a sell signal at about 5 times risk, and the stock ultimately didn't go much higher after that. That's a typical day trade that revolves around that concept of surprise. What do you think? Do you like to trade surprises yourself, or do you take a different approach to finding opportunities? Love to hear what you do in the market. Leave your comments below. And I hope that you've enjoyed this week's Market Minutes. If so, click on the like button. It always helps the number of views that this video gets. And I think lots of people could benefit from this. If you've enjoyed the content here, it's free. So why not subscribe? Hope you have a great week in the market and trade well.